You have pictured we'd end it down about 1%, that the China data could have been that bad?
Kate, we knew that the China preliminary flash PMI numbers was a central piece of news coming out today. And if we have a look at the market, unfortunately, it was a very negative session, down by 1.1%, and that was on accelerated volume of $4.7 billion. So that's not a good sign technically either, the fact that we saw falls on some big volumes coming through. If we have a look at these flash PMI numbers for the month of January, they are the preliminary numbers. We will get the final numbers at the end of the month, but it gives us a first insight into the manufacturing sector in the month of January for China. And the read was disappointing, 49.6. Now, 50 is the mark that separates growth from contraction. So what we are seeing is contraction in growth in the manufacturing space. If we break it down, new orders, we actually saw a fall there and a change of direction. New export orders as well as employment, we saw a fall and a faster rate in terms of that fall as well, and an immediate reaction in terms of the market. If we have a look at the intraday graph of the Australian market, this is what it looks like, and you can probably pinpoint exactly when those numbers came out. The two sectors which were most affected were the two biggest sectors of the market. That's the material sector as well as the financial sector. Now, if we have a look at the material sector, this is what it looks like, and you can understand why the material sector falls. So much of its demand, especially the iron ore part, does come from China. So understandable that we did see a big response from the miners. We also saw a big response from the financial space. If we have a look at the financial space, and this is financial index excluding property, you can once again see that we've seen some sharp falls there. Now, this is probably more correlated with what we've seen in Aussie dollar action today. The Aussie dollar on the back of those China numbers, if we have a look, has seen a sharp decrease, and usually that leads to overseas buyers pulling money out of the Australian share market. And if you have a look at where international investors hold their money, they're usually in a handful of around about 6 or 7 stocks, which includes the big 4 banks, BHP, Rio Tinto, and maybe a Newcrest Mining. So these are the stocks which generally see quite a bit of selling when we do see international participation and some big moves in terms of the Aussie currency, which I think we've seen today. On the flip side, though, there are stocks exposed to the Aussie dollar, and they did well today. So any stocks with a lot of revenue offshore, like Macquarie, like 21st Century Fox, like ResMed, as well as Amcor, actually bucked the trend. And that was quite a difficult thing to do because the market was a sea of red. Every single sector was trading low. In fact, in the top 20, only Macquarie was trading high today. In the top 50 stocks, we only saw 6 stocks making gains. And in the top 100 stocks, we only saw 12 stocks making gains. So really the action today did centre around those preliminary flash PMI numbers coming out of China, giving us a read on the manufacturing space, the Aussie dollar impact, and also the impact on the miners.
Julia, let's take a look at some of the big movers on the market today. I'm looking at Insurance Australia Group, down by about 3% at the close there. What did we hear out from them today?
Unfortunately, we heard that growth is slower, and that's really what the market latched onto. Now, we also heard about the insurance margins, and we saw an upgrade to margins there, 14.5% to 16.5%, and that was from previous forecasts of 12.5% to 14.5%. But this is not a reflection on business being good, it's just a reflection on the release of reserves. And the reserves is money that's kept aside for claims which isn't used, and it in turn comes back and hits the balance sheet. So that's not a reflection on the business at all, but rather just a release in the reserves. What the market was most concerned about was the outlook on gross written premiums. Now, previously growth was forecast to be 5 to 7%, and we've actually seen that downgraded by 2%, so down to 3 to 5%. And really this implies that, you know, it's pretty tough in the insurance industry, especially here domestically. We're seeing some new competition enter into the market, and it looks like Insurance Australia Group is struggling there. The numbers today, however, they don't include the Wesfarmers underwriting business, that acquisition, which should be completed in the second quarter of the year. And this should be quite earnings per share accretive for Insurance Australia Group. In fact, it should add about $1.3 billion worth of gross written premiums. So if we have a look at their CGU business, their WFI and their Lumley business, well, this all of this together should be about $4.3 billion worth of gross written premiums. But of course, the bad news around the growth side of the gross written premiums saw that Insurance Australia Group shares down 3%.
Julia, also got to ask you about Newcrest today and what was going on here, because it was the best performer in the top 200 at one point in the day, up about 4%. Then we saw it slide, and I think it's finished the day down about 2.25%. I know we got some news out from them, but what was the turnaround point?
Not sure what the turnaround was. I guess Newcrest is one of those stocks which does get heavy international participation, and with the Aussie dollar falling off quite sharply, we did see quite a big reaction in terms of a handful of stocks, including the big four banks, Newcrest Mining, BHP and Rio Tinto. Now Newcrest did come out with some numbers today. They have reaffirmed guidance at the top end of their guidance and cash costs at the bottom end of their guidance, and this is a positive. Not a huge amount of surprises in this update, given that we did see an update on the production numbers around about a week ago. But what was positive out of this update was the fact that we saw quarterly production costs down by 16%, and we're probably going to see even deeper cost cutting coming into play with Newcrest Mining. So that's a positive there. In fact, if we have a look at the all-in sustaining cash costs, it came in terms of Aussie dollar terms at $921, and they've achieved a realised gold price of $1,651. So still very profitable during the quarter. Their target break-even mark in Aussie dollar terms is $1,450 an ounce. And I guess if we have a look at the gold price, as it traded in Asia today, we're down at 1,403 Aussie dollars an ounce. So really we do need to see either the currency moving in the right direction for Newcrest Mining or the gold price moving in the right direction. And unfortunately, as it's trading at the spot price today, at the currency today, what we are seeing is the price being below that break-even price. So Newcrest Mining, a positive report coming out today. Cost cutting was the key there. The shares initially higher, but by the end of the session down 2.3%.
Julia, what about Santos today? We saw quarterly record sales revenue up about 21% to just over $1 billion, and I think that's actually a 6-year high in terms of oil production for the company. Not too big a reaction from the share price though.
Not a huge surprise, given that just in December we did see a production downgrade from Santos. Previously they were predicting 52 million barrels of oil equivalent, and they downgraded that to 51 million barrels of oil equivalent. So given that they were the fourth quarter numbers, it was pretty easy to work out that we were expecting 13.1 million barrels of oil equivalent, and they came in at 13.1 billion barrels of oil equivalent. Now, in terms of revenue, we did see quite strong growth there, up by 16%, coming in at $1.1 billion for the fourth quarter. And in terms of full-year revenue as well, we saw a new record there. So records being broken by Santos, no huge surprises. The production profile will increase quite substantially when the Papua New Guinea LNG and the Gladstone LNG project do come online. The share's up 0.5%, so you could say that Santos did manage to outperform the market, but this was a difficult day all across the market today, every single sector trading lower.